Appreciate so many of you coming out this afternoon. Also like to thank those who are live or watching the live stream. So just heads up, if you are asking some questions later on in the question and answer part, please use either the microphone that's on the tables, or if you don't have one in front of you, one of the microphones that you'll see at a few strategic locations, just so that those that are on the live stream can catch your questions as well as the answers. Again, welcome everyone. I'm Steve Dew, Provost and Vice President Academic. With me today is Gitta Kulczycki, the Vice President Finance and Administration. And hopefully if we're all in the right place, we're here to talk about budget model. Lots of conversations are happening around things budget. So I just want to clarify that there are discussions happening around things like the multi-year planning process, our annual cycle of budget and budget approvals, initiatives to raise revenues, initiatives to manage costs. Those are all really important parts of the conversation, but we're primarily going to focus today on budget model, which is code word for, given how many dollars there are on the table, how do we divvy them up to know how much should go to arts, how much should go to science, how much should go to medicine, how much should go to the registrar's office? So that's the purpose of the budget model and the main thing that I'd like to cover today. You'll also know that there are different budgets that we have. So there will be a capital budget, there will be an ancillary budget, there will be a research budget. We're talking about the operating budget, which is the component of our resources that we are able to allocate to the things that are discretionary. Everything else is tied to a particular purpose. Okay. We have a pop-up that's there we go. Okay, so currently our budget model is what's referred to as an incremental budget model, which basically means that in a unit, in a faculty's budget, in the coming year, it will be whatever its current budget is in this year, plus or minus whatever pieces we're able to do in terms of the changes, whether it's a budget cut or if it's a good year, what more or less across the board increases would look like. There are some opportunities to do some special projects within that, but for the most part, it's a very simple across the board approach. What's the problem with that? Well, first of all, I'll start with what's the benefits. It's a simple approach. It allows us to focus just on what's at play in terms of differences over the previous year. It's relatively predictable, and we've managed, as have many institutions managed with this approach for many years. Why have we become dissatisfied with it? Why have we been seeking a different approach? And that's because the way that the budget has been created is very much historical. 20 years ago, there might have been a great initiative that we started in a particular faculty. It had its lifetime, it's ended, but those dollars are still embedded in the budget because decisions made 20 years ago, overlaid with year over year of whether we had cuts or increases. So we basically, over time, get a variance between the strategic priorities of the institution and decisions that have been made over the past, which may have made sense at the time, but are they still relevant? So this means there's really a lack of transparency. If a dean were to come to me to say, why is my budget this amount? All I can say is, well, it was about that last year and the year before and the year before. And so that lack of accountability, that lack of a transparency has driven us to think about how do we allocate our resources in a manner which has a clear rationale and clearly aligns our resources behind our mission of teaching and research. Many will be aware that 5 years or so ago we had a lot of work around a budget model called RCM, Responsibility Centered Management. That work came out of the same place, a desire for us to do something a little bit more rational, a little bit more transparent and predictable. We didn't ultimately implement RCM because it has some complexities that really don't apply in our situation. And so we went back to the table and came up with what is called an activity-based model, which is what we're talking about today. For the public good, our strategic plan talks about stewardship and managing our financial resources in order to have a strategic, publicly accountable approach to directing the resources directly behind our academic activities. So we can pull these activities right back to our strategic plan. We did start this with a set of principles that we were trying to achieve with the budget model. These principles, in fact, were created for the RCM project, but we had a chance to revisit them, and they went through our GFC approval back in 2017. And they're the ones that I hope we would think are the correct set of principles as we go forward with developing a way to allocate our resources. I won't go into the details, but we can certainly talk about each of them in the question period. In terms of what the budget model does, or just think about budgets in general, the operating budget is, for the University of Alberta, about $1 billion in round numbers. What we're trying to show on this graphic here is the column in the middle, that's our resources, our revenues for the operating budget. There's a box at the top and the box at the bottom, which are relatively small. Those are research support fund. That's money that comes from the federal government. Used to be referred to as the federal indirect costs of research dollars. It's about $16 million out of that $1 billion. So relatively small, even though $16 million is still a lot of money. At the bottom is investment income. Again, about the same sort of magnitude of dollars. This comes from Gitta and her office using the cash float and investing it in order to make sure that we can get some return on the dollars that we have, that we know we have to spend, but not yet today. Everything in green is the big parts. That's our Campus Alberta grant, roughly about $650 million. And then the dark green is the tuition and fees, a little over $300 million. And so those are the revenue pieces. On the right-hand side is the expenditures. How do we spend the $1 billion in our operating grant, or operating budget? Top piece is administration, central administration. And the budget model says a bit about central administration costs, but it mostly is about how do we prioritize between the faculties. And I'll say a bit more about that later. There's a small box, the dark blue, which is the Subvention Fund. I'll say a bit more about that later. And at the bottom is an aqua-colored box, which is Strategic Initiatives Fund. Again, I'll talk about that later. The gray pieces are essentially the faculty budgets. That's where we want to understand how those different pieces come together so that a faculty knows how its budget came to be, and also if it wished to change its budget, what actions it would need to take in order to make that happen. Or conversely, if it's changing its teaching or research portfolio, what are the implications to budget from doing so? So let me start first with the provincial grant allocation. That's that biggest single piece, more than $650 million. First piece that we'll pull off the top is the central administration. Now that isn't to say that that's first to the trough and always preserved. It's just that the model deals with academic drivers which don't apply for central administration. So there are different mechanisms to manage the size of the administrative budget. And part of that is through what's referred to here as the Administrative Portfolio Review Committee. The net is split 70-30. 70% goes to the faculties on the basis of their teaching functions. 30% goes on the basis to support the indirect costs of doing the research that they're doing. There's a little caveat at the bottom. When we get our Campus Alberta grant from the provincial government, most of it is just simply, here's your Campus Alberta grant, spend it on things that are appropriate for a university. But there will be some specific lines in there which are, let's say, the rural physician training program, or a particular targeted expansion of, let's say, engineering as something that the university or the provincial government has funded. So those pieces that are targeted first come off and go to wherever it is they're directly targeted to. And then it's the remainder that gets split up, the 70-30. So the 70% that's on the teaching. This is allocated according to a formula approach. One of the coefficients in the formula is something called a basic revenue unit, or BRU. And essentially what this is the amount of money from the provincial grant that is required to deliver the academic programs. Now, each faculty would have a different BRU because their cost of delivering their programs is going to be different. And so the BRU is calculated and then multiplied by the number of students that are actually enrolled in that faculty to determine what the BRU contribution to the faculty's budget will be. And when you do the math, this is about a third of all the revenue that would go to the faculties would follow out of this 70%. The 30% that follows the research activities, and again, this is to support the indirect costs that a faculty incurs by having the research in its labs, the payroll running through its systems, etc. It's not to fund the research itself. That's what you get grants for. So the way that the 30% is computed is we've tried to find some indicators of activities and recognize this is a bit of a challenge because what scholarly work looks like in different parts of the campuses is different. So we've got a set of 4 different activity indicators with the idea that that mix is hopefully as representative as possible of the totality of all of the different things that occur on campus. So 5 of the 30% comes from tri-council dollars that are expended. 5% comes from other dollars that are expended. And it's expended, not earned, just simply because grants come in a lumpy form, but tend to get spent, if it's a multi-year grant, in a more uniform manner. The next 10% of the 30 is from the number of successful external grant applications. So it doesn't matter how big the grant is, just as long as it is ultimately successful, we'll increase the count for it. And then finally, it's the externally raised dollars which are used to fund graduate students and postdoctoral fellows. So those pieces make up the 30% that goes for research. And if you look at a faculty's budget, on average, this is about 15% of their total budget once you run the numbers through. The next, or actually the biggest piece, is the tuition. So when I talked about teaching dollars in the previous slides, that 70%, that's following students into the faculty in which they're registered. The tuition dollars follow the student into the whatever classes they're taking. So if you can imagine you're in one particular faculty, but you're taking courses in a different faculty, the tuition dollars follow wherever the student is going on campus. So there's 2 different pots of money that fund the teaching component. The first is the program funding coming from the Campus Alberta grant. The second is the tuition dollars that the students are paying. So there's a couple of caveats. If it's international tuition, there's a small amount that gets taken off to fund international student supports, financial supports. And if you're doing a cost recovery or a non-credit, then there's just a 15% overhead just to cover the cost of lights and registrar and everything else that has to happen in order to support those activities. Any other indirect costs, if you've got a market modifier or a program differential fee, that's all part of tuition. It just simply goes to wherever the student is registered. So this is about 40% of your total faculty budgets, the biggest single piece. A couple of smaller pieces. I mentioned earlier the federal indirect cost money, the Research Support Fund. It gets split 50-50 between RSO and administrative units and the faculties who are providing the space, the labs, the various supports that occur out in the faculties. Again, not a very large amount. This total is about 1% of total faculty budgets. Also, if you bring in indirect costs, not from the feds, but from any other kind of organization, all of those dollars just simply go to wherever the faculty, where the research is being done. Other revenues, so if there's donations, if you have a bake sale on the quad, if you're running a training session in Nigeria, whatever revenues go straight to whoever is conducting the activity. Okay, so that's on the revenue side. There are some changes, or at least some details around the cost side. So under this model, all of salary and benefits continue to be the responsibility of the faculty and units. There is one thing that's new is a space charge. And what would happen is for every faculty, we would look at its space that it's been assigned. It gets categorized into classrooms, admin, research lab, and other, just because different spaces have different costs associated with supporting them. And this is largely, when I say supporting, I'm talking about the facilities support. So that cost for space is charged to the faculties, but it comes, the revenue from that charge comes off of the requirements for facilities and operations in order to maintain that space. So it's a net zero cost to the faculty as a whole, but a faculty that has a lot of space will end up paying more than it gets in, and a faculty that has very little space will get more revenues than it's paying out. So it's an incentive to make sure that you are using just the space you need, rather than what is the current situation, space is free to the end user, and so they demand as much of it as they can. So that's actually a philosophy in the system. We don't charge unless it's intended to change some behavior. Otherwise, we get all these transaction costs, which are just simply, one person over here paying someone over here, and the net effect is a friction that wastes money. One other piece on the space is if we rent from a third party, then the cost of that lease or rental goes to whoever is asking for that space. And we rent about $6 million worth of space from other organizations, despite the fact that we've got more space on this campus than pretty much any other university in the country, even much larger ones from a personnel basis. And again, it just comes back to let's make sure we're using the space we need as wisely as possible. So that's a major component of excuse me, a change to how costs are managed. And this is about $45 million. So not a trivial amount, but on a basis of the budget, it's about 6% of your total faculty budget. Okay, if you remember that block diagram, there were two boxes there, a dark blue one and an aqua blue one. One of those is the Strategic Initiatives Fund. So this is the idea that we as an institution need to have some resources allocated so that we can go in strategic directions, so that we can respond to for the public good or other either strategic documents or opportunities that might arise, such as matching programs out of the federal government. So the Strategic Initiatives Fund would be intended only for one-time allocations. doesn't have to be expended in a single year, but it would not be to hire 5 more people who will be on the payroll forever. The time frame is expected to be 1 to 5 years. Generally, we'd be looking at only funding things in academic units unless there was a particularly compelling case. And management of this resources would be, as it currently is, through the President's Executive Committee Strategic PECS. But we would, make sure that we vetted all of the decisions through Dean's Council to make sure that at least the deans understand where the priorities have gone to. The target of this fund is, over time, and it will take us a number of years to build it up to this, is about 2% or about $20 million. And that's a number that also roughly corresponds to the investment income I talked about, that little box on the bottom of the revenue side. And the reason for aligning those two is investment income is variable. It depends on what the markets are up to, the price of oil, a bunch of things that go up and down over the years. And what we're currently doing is using those dollars to support our operations, which means salaries. And so in good years, we got lots of money, we think we can hire more people, and then bad years come along and we realize we didn't have the money to backstop salaries. We'd like to get out of that business. If we allocate variable dollars to one-time projects, we know we have exactly the resources we need before we approve the project. And we don't have an issue of ongoing obligations covered by a variable revenue source. The other fund I mentioned is the Subvention Fund. And the Subvention Fund recognizes that, at the back of this is a formula, a model. But at the end of the day, we're people who have to interpret whether or not the equations give us the right answer. And there will be some things that potentially the model says don't fund or don't fund very well that we simply can't accept. Our values are such that we have to do this anyways. An example, and this is a hypothetical example, but imagine that, let's say, in the formulas, the Faculty of Native Studies came out as a loser, that it just is not funded well enough. But that is something that's so critical, so core to our value, that we would not want to let that faculty go under. And so Subvention Fund could be a place where we would be able to fund that. It would be for continuing, but with a term that could be renewed. Again, just some comments here about how we would make decisions around this. Again, PECS, making the final call on it only accessible for academic units, and annual reporting to Dean's Council to make sure that there's that balance between understanding the academic priorities and the institutional initiatives. So that's to describe all of the different pieces. I'll turn it over to Gitta to just make some comments about how it fits with some of the other initiatives, and then we'll come back for some questions and answers.
Okay, thank you, Steve. All right, what will be the benefits of the new model? One of them is to bring transparency to the allocation of resources. So Steve spoke about, at one time in history, there was an attachment between activities and the dollars you got. Well, now it will be quite obvious and explicit. It will help us to align our spending with strategic academic priorities in a number of fashions. One is the overall thrust of the model is meant to support our academic enterprise, our teaching and our research. But also beyond that, our Strategic Initiatives Fund, to align that to our academic mission, as well as our Subvention Fund. It creates clarity on what the impact of making choices is, and so in that sense, it helps us to pursue more long-term planning. And it will enable, I think, all of us to make better decisions because we will have data, explicit data, on which we allocate the dollars, and those will be obvious to everyone. Whoops, press that. All right. Whoop. Okay. Somehow I've skipped a lot of slides there. Okay, key features of the budget model, and this is a little bit about what the budget model is not. The budget model is one element of the annual planning process, and Steve talked about that. We will still have our multi-year planning process. This talks about how we allocate the resources that we receive. It doesn't replace the decision-making processes that faculties and units have to pursue in terms of how they choose to allocate their dollars. It is a tool for allocating resources. Budget decisions are still within the faculties and the units exactly as they are right now. It is designed to allocate resources to activities. And it is therefore not designed to create incentives. We're trying to align it to the activities of teaching and research. It does not reward or directly fund research projects. What we're trying to do in terms of the research support is to direct dollars towards the activities that are undertaken for research. So supporting the indirect costs of research. I want to talk a little bit about where does this fit into our budget planning process. You may or may not be aware of this. This is a site that has been put up now a few weeks ago, and it talks a little bit about how do we develop our budget plan. So I want to go to the slide that you've got. This is about the third slide in. So when you look at it, we're talking about our operating budget. And really what we're talking about is, in terms of the operating revenues, what we get from the provincial government, and tuition and fees for the most part. And it's about allocating it. So it's about taking those amount of monies that were provided with a mechanism and formulas now as to how we will distribute those. It won't give us more money, and it won't give us less money. It is simply about taking the amount of resources that we will have, and this is a way of allocating those resources across the university. So one could imagine, let's do the happy side, the provincial government gives us a grant of increase of 10%, that would be lovely dreaming, and this will give us some information then on how we allocate that across teaching and research. By the same token, if we receive a reduction in our budget, this doesn't tell us how we'll do things differently. It simply says that bucket of money, this new budget model tells us how we will allocate that. So we've got a lot of work to do yet. We are in a pre-implementation stage, so on the left-hand side there, we're doing another run of the numbers using our most current year's information, and there will be meetings with each of the faculties to review the numbers that are generated by that. We've also got a lot of work to do to line up for this model. We are looking at our phase 1 of implementation starting in April of 2020. So when we undertake the planning process this coming fall, we're still finishing off the current budget planning process, but this coming fall when we start that planning process, that will be the first time in the budget of April 1st that we'll be starting to make allocations using this new budget model. The intent is to bring that in over a period of years. Actually, we're looking at 5 years to sort of transition in. For those faculties that get more resources, obviously they'd like that to go a little faster, but for those who are having budget adjustments on the other side, obviously we need to give them time to prepare and make changes and so on. And so that we will start then on April 1st in the budget year, that's April 1st of 2020. And we are looking, as I said, full implementation over a number of years. So we got a lot of work to do still. We have to make sure we align the data, all the data availability, align it with our current planning process and timelines. We want to make sure we've got the data accurate and right. And so it's consistent. So it's making sure we've done that one more time. Training materials. People that are involved in developing budgets need to understand this too, will want to understand it. And so we want to make sure we provide that information. Steve talked about both the Subvention Fund and the Strategic Initiatives Fund. Well, we have to develop some terms of reference and principles. By what manner will we decide how these allocations will be made? What will be our parameters for supporting things that come through the Subvention Fund and the Strategic Initiatives Fund? We haven't done that yet. We need to develop and or examine our processes on enrollment. So if a faculty or multiple faculties suddenly increase their enrollment of domestic students, our Campus Alberta grant doesn't change. It is not sensitive to the amount of students. And so it's a matter of saying, well, making sure we're clear on what the enrollment plan is. And I guess that's the other thing just to mention. This whole budget model, recognizing the Campus Alberta grant applies to domestic students, right? It doesn't apply to international students. Developing our policies and procedures to make sure that the faculties aren't offering courses outside their mandate. So we don't suddenly want 17 faculties offering a first-year English course. And so we need to look at that side of it too. Who's been involved? Well, this has been under development since the spring of 2017. We had a budget model working group that's done an enormous amount of heavy lifting involving faculty as well as staff, and a small group. And then we've done a lot of consultation, as you might expect, with deans and the vice presidents and the SFOs across the institution. Who will be mostly impacted by these changes? Well, clearly those that are involved in the budget development process. So deans, vice presidents, senior financial officers. There have been a lot of consultations, probably in about the last 3 or 4 months, or discussions rather. GFC, the Board of Governors, the Academic Planning Committee, the Administrative Strategic Council, Dean's Council, we've talked about it a number of times, Chair's Council, and so on. So now I want to come to some frequently asked questions, and won't surprise any of us that they're largely focused on the academic realm.
Okay, so we've, as Gitta said, had a number of discussions, some really great discussions actually, about the pros and cons of this approach, and some questions have come back a number of times, so I thought, well, we'll proactively try and respond. And one that's not on the list, which maybe I'll start off with, is does the budget model affect departments? And I'll start there, which is to say the budget model really is only allocating dollars at the faculty level, and how a faculty decides to do its internal allocation, we're just simply leaving to whatever mechanisms are currently in place. So it's really just a faculty level budgeting tool. Question number one, and this has probably been the biggest concern folks have had, is do we create some incentives, some undesired incentives with this system that will undermine collaboration and cohesion of the institution? And there are two different pressures at play here, so it's not a simple question to answer. In many cases, in past years, interdisciplinary and collaborative projects between faculties have been held up by the fact that there is no simple model for sharing relationships between institutions. So if, let's say, Faculty of Engineering wants to offer a business minor, what's in it for the School of Business to provide those courses? There's no mechanism right now. It all boils down to case-by-case, one-off discussions. What the budget model does is put in place clarity. If Faculty of Business or School of Business is offering this many courses to this many students in engineering, the mechanism, the formula is in place, and the School of Business has clarity on the revenue streams, and it happens automatically. There's no extra interventions required. So in that way, it will simplify and facilitate collaboration. The flip side, though, is the one that Gitta alluded to. If faculty see there's benefit in not sending their students off to service courses in another unit, but offering them in their own unit, we will have 17 different faculties offering first-year English, which obviously does not make sense. So how do we make sure that doesn't happen? And I think some of it is just simply going to be diligence, but we do have clear mechanisms. This is not a new question. GFC policy, I think it's dating back to about 1973, puts in place clear academic spheres in which it's appropriate for a faculty to offer courses. And English doesn't fit in very many of those different spheres. In fact, it belongs primarily to the Faculty of Arts. And so if another faculty wishes to offer their own English course, GFC policy says that should not occur, and there are challenge mechanisms in place in order to make sure that that doesn't happen. So in principle, the mechanisms are in place. We'll have to keep an eye on it to make sure that those mechanisms are working, and if not, revisit. But that is the potential downside of the model that could lead to a competitive as opposed to collaborative approach. At the end of the day, though, I'm hoping that all would agree we don't make our decisions based strictly on finances. We are an academic organization. Our leaders are academics who understand the different disciplines and the need for a collegial approach to it. So I'm hopeful. Question number 2, how does the model recognize and account for community engagement or service? So those of you who are professors will have, as part of your expectations or duties, teaching, research, and service. The model is very clear about teaching, about research. How do we reflect service? I want to break a direct link between what individuals are supposed to be doing and what the institution as a whole are to be doing. So there's not, the sum of our FEC reports does not equal the institutional budgeting process. So remember that the budget is about covering the costs for the activities. And if we think about the activities of teaching, well, the costs are very clear. We have classrooms, we have instructors, we have lab materials that need to be provided. If we think about the costs of research, they're also relatively clear. They are going to be lab space, they are going to be payroll as you appoint graduate students, there are going to be financial transactions as you spend your grant on supplies or materials. What is the cost at the institutional level of service? This is a really, really difficult one. For most of us as professors, our cost of service is simply time. We put our time in as we serve on editorial boards or sit on various committees. And so professors' time actually gets wrapped up indirectly into the BRU calculation, in fact, if you follow the math. But there isn't an explicit charge that the university incurs that is clearly a comparable one across the institution. So the model is silent on service. That isn't to mean service stops. As part of the faculty agreement, I hope you will all continue to do your service, and that will be recognized by FEC. Third question that comes up fairly often is around the research allocation. So if you have a multi-investigator grant, and those investigators sit in different faculties, the activity, the cost to support the activity of the research will be felt in different faculties. Under our current system of accounting, only one faculty would claim that grant in their revenues. So that is a problem. And it could potentially disincent inter-faculty collaboration. It is, however, I believe, a fixable problem. Grants 3.0, which is currently our grant administration system, does have the ability in the back end. So when you submit a signature page, if you've got multiple investigators, you can also indicate in percentages that add up to 100 how much of the activity fits with each of the investigators, and hence can be parsed back to different faculties so that we get all faculties recognizing these inputs. This is not yet in place, but all of the background infrastructure in Grants 3.0 is in place. We just simply have to update our procedures in order to make that happen. So that's the set of questions that have come up so far fairly frequently. We've got another roughly 20 minutes, so happy to explore either revisiting any of those questions or any new ones that, that individuals would have. Again, remind you, because of the live streaming, if you're asking a question, please to do so in a live mic so that everyone gets to hear it.
So you can turn on your mics as well for those who have mics in front of them. When you're only when you're going to ask a question, please. And the middle button will create the speaker for you. For those who are not, that's what these two mics are for on either side. And so I saw already some hands up. Oh.
Yeah, Graham Pearson from the Earth and Atmospheric Sciences Department. I'd like to comment and ask for more detail on the space charge, because this sounds like a direct tax on science, engineering, and FOMD. I mean, as it's been presented, you say that things in the model are devolved to faculties, and those are the faculties that will be affected. Faculties, when they get a financial challenge, inevitably pass that financial challenge down to the departments, and the departments inevitably pass that financial challenge down to PIs. I've been at several institutions where a model like this has been proposed and implemented as a space charge, and it's been disastrous in both cases. It disproportionately penalises excellence because the people that are doing well run bigger labs and get taxed in more ways. There is no additional pot of money to call on. We can't generate these funds, certainly not from NSERC. And finally, it ultimately led in one case to massive dereliction around the university, where departments would give up space wholesale, often world-class labs. Nobody wants to take that space on because they don't want to pay the tax, and the place looks rather shoddy. And so those are very big concerns I have about the space charge.
So some great points, and you certainly have hit on the faculties that are large space users. Certainly, it is not the intention. In fact, it would be very much an error if the budget model drove the behavior that undermined the excellence that you're talking about. So absolutely agree with the need for us to be concerned about this. The dollars in the faculties, so the budget model is a net zero transition. So if we were to turn it on tomorrow, it wouldn't change the collective faculty budgets, but it might move some budgets up and some budgets down. So the dollars that are currently, sorry. So the dollars that are currently supporting those facilities don't magically disappear. They stay in the system, and it is intention that they continue to support the facilities so that the facilities budgets don't disappear, that our facilities don't wither away. I can't remember what your term was, but we certainly don't want a bunch of derelict space on campus. The reason for putting this one in play is right now the university has 1.8 million square meters of assignable space. The University of Toronto has 1.8 million square meters of assignable space. And their student population, their faculty population is twice our size. On a per student, per faculty member basis, our physical plant is huge, and that's because the incentives have always not existed to control the amount of space we use. The government pays the capital cost in general, but government pays the incremental operating cost. That latter is no longer the case. They've decided going forward, no new lights-on funding, as it's referred to, will accompany new buildings. But in the past, we've gotten to where we are because space has been free. So this is putting in place a relatively modest amount of pressure to oppose the expansion into vacuum. It's, as I say, about a 6% of the total faculty budget, so not saying that's insignificant, but it's not such that a faculty who still wants to be doing excellent things on the research and teaching side won't be prepared to make that investment in the same way, but I hope they don't stop hiring great professors because that costs them money as well.
But where does that extra money come from? We don't have access to it.
The money's in the system. We're not creating or destroying money in the system. It's just that the money is getting put into the pie that gets divvied up, and how much gets taken away from each faculty's slice of pie depends on how much space they're using. The faculties that do lots of research and hence have a higher driver for space, lab space is probably our biggest single reason why we use a lot of space, they will get compensation for that research in terms of the 30% slice. That's probably the biggest single reason why the research costs are what they are, is to cover the cost of space.
Can I just also say, it may help you to know that the cost for that space, which are effectively the utility, cleaning, are added or considered in calculating the basic revenue unit. So Steve talked about the BRUs, what he called BRUs. Those costs are in there.
Will central administration be taxing their own space as well?
Well, it's a great question, and it follows logically. I'd like to answer that question by considering that in a perfect world, the size of central administration is zero, and all the dollars are going out to faculties to do the teaching and research that is our mission. So what we want is tensions that try and reduce the footprint of administration, and they're not the main topic of today's discussion, but there are many conversations about how we're going to do that. The perfect size of a faculty versus another faculty is not ideal. Zero is not the correct answer for that. And so what the space charge is trying to do is not balance the tensions between center and faculties, but between the faculties themselves.
I saw a question over, I think you had.
This question may be stupid or illegal, but with the way we're looking at allocating the money, is there efficiency or reduced stress in shifting our budget year to align with the academic year? April 1st seems a weird time to be trying to sort out, particularly funding that's following students and things like that. Might shift to May or the start of a term.
I think you said, is it illegal? That's the answer.
I mean, we have to follow the government's here.
We roll up into the government's finances, so we have to follow their financial year.
Yeah.
So my question is with regard to the 30% allocated toward research. So under this budget model, weight is being equally split between tri-council and non-tri-council dollars. So given the added importance of tri-council funding and university metrics, might it be better to provide incentive by putting more weight on tri-council dollars on a 1.5 to 1 or 2 for 1 basis?
It's a great question, but you used a key word in there, which is incentive. And it is not an incentive-based budget. It's just simply trying to cover the costs of activities. And the cost of doing tri-council related research is about the same as cost of doing non-tri-council related research. But I like your thinking about how do we boost tri-council because it has add-on benefits in Canada Research Chairs, in the federal indirect costs, and other CFI allocations. We're not trying to solve everything with this budget model. That will become more of a conversation I have with the deans as part of annual reviews and other strategic discussions.
Did I see someone else? Yes, go ahead.
Hi, my name is Kyle. I'm a student in Faculty of Arts. I'm just wondering how the new budget model was developed based on the feedback on RCM and how you would say the model improved on the RCM proposal?
So,
Well, I can start off by saying a few comments, and Steve can add to it. RCM works great when you have more control over your revenue sources, and we don't. On our operating budget side, we don't. It also works on a philosophy of charging out every single cost. Come back to the administration services. It would allocate all of those out on some basis to all of the faculties. What Steve said earlier is exactly where we ended up. Where is there some difference in decision-making that can occur by virtue of allocating out an expenditure? So the only one that we've come up with, aside from obviously the revenue that allocates to teaching and research, is space. And for the reasons that Steve has outlined. I don't know if there's other things, Steve, you wanted to.
No, I think that covers it well.
Kevin.
Yeah, we've broached this a little bit before, but yes, there should be a healthy tension between the money that's spent on central administration and our core functions of research and teaching.
You want to talk about uniform?
And
well.
with the way this is laid out, the central administration funds are pulled out immediately. And so we don't have a tension then, if I can. And so we should have that tension, so we have to have a mechanism to have that. And one of the questions I have, I guess, is given the existing description, there is mentioned an administrative portfolio review committee. Now, is that committee going to be, I don't know who's on that, maybe you can comment on that, but are we going to have people who are going to really assess the amount of money that's dedicated to central administration, whether it shrinks or grows or whatever, and especially people who are involved in research and teaching such that they can make it clear about this tension. So if you could comment on that.
Well, let me start off by saying separate from this budget model, so completely separate, we have joined a benchmarking initiative called Uniform, and some of you may have heard about that because we did a first part of a quality survey back in November. That focuses on administrative services, administrative functions, and allows us to compare ourselves against peers who are also participating. And so we've started down that journey. We did the first quality survey in November. There will be a second part of it in May. We will be looking at the cost data in June and July. And in October, we will have our first full set of cost and quality data. So I don't know who's going to sit on that portfolio review committee because it doesn't exist yet. However, it will be very informed or advised by what we see out of that. It does allow us to compare against other institutions and in terms of where are people doing a better job than we are on the cost and quality metrics on processes. So I do think that will be very helpful in the longer term as we focus on what is possible, but also in terms of informing those discussions.
Okay, and I would argue that whatever evaluation there is of the central administration costs, that occur on an annual basis, just like the individual faculties are under this kind of scrutiny.
Yes. And that's the intent.
Okay.
And we won't necessarily do the quality surveys every year. We were thinking we'd do it every second year, just from the standpoint of it takes some time to make changes and you want to measure it substantively. But we would have that annual data collection every single year. So that'll help us as well over time. Let me come back to this side. I'm trying to be, or I haven't looked at the back yet. Okay, go ahead.
So I'm just curious, in the context of Campus St. Jean and Augustana campus, so they're the only faculties that use their spaces, how does the space rental apply to them if it's meant to, as you said, provide sort of an equilibrium amongst faculties when they're the only faculties who use those spaces?
So the costs that would be attributed to any faculty only are comprised of the administrative space, so the offices, the classrooms, the research. There might be a few places where, like, we have agricultural buildings, for example, that might go into an other category. But for the most part, what we're looking at is, regardless of whether you're a faculty on its own campus or a faculty that's sharing the broader campus, all of the backbone infrastructure components don't get charged to the faculties. So this comes back to do we charge for administrative space? Do we charge for the heat and power plant? No. Do we charge for the corridors and the washrooms? No. And so what's left when you strip away all of the parts of Campus Saint-Jean that are part of the campus rather than the faculty, what we're left with is about the same as if you had a similar size faculty that's on North Campus.
Let me come back to this side. Yes.
I'm hoping you can just clarify something for me. So we talked about space in terms of research, and that money was now attached to students depending on which classes they choose. But what about teaching labs that have a requirement for a lot of space? Isn't that going to cause extra cost on the teaching side for those students, that you're not getting extra money for that student for the extra space?
Or maybe you are.
So I agree that doesn't come from the tuition side. It does come from the BRU side. So the programs which have lots of teaching labs or for pedagogical or accreditation reasons are constrained to being small cohorts. Those are going to be intrinsically more expensive, but they will have a higher BRU. And so they will get a bigger chunk per student coming out of the Campus Alberta grant.
Okay, we're getting close to the end of our time, so we might have time for maybe 2 more questions. Let me just, yes.
I just want to ask a question about the BRU. So in kind of conceptual, it makes sense that you have to have different costs for different kinds of teaching. But I'm wondering how you will guard against historical inequities that are pre-built into the BRU you come up with today. Like, will BRUs be adjustable over the years, or is it a one-time shot, or what?
Great question, Janet. The BRU at the outset of the model will be based on history. So those faculties that have seen historically large costs will have a bigger BRU. We do anticipate a process probably about 4 years out where we revisit from first principles what BRUs should look like, just simply so that we're not perpetually rewarding those who have always been inefficient.
Yes, final question.
All right. Thank you very much for having this township. Actually, it was very useful. My question is related to the table that you show, Steve, the revenues and expenses tables. And it's very apparent that one of the expenses is really major and distributed allocated to different expenses. One of the revenue from campus grant, for example, distributed different. But if you have a budget cut, for example, that expenses that depending on those campus Alberta grant will suffer most, or equally all other expenses will suffer across campus, based on this allocation model.
So if, for example, let's imagine the scenario, the lovely scenario of 10% increase to our Campus Alberta grant, then the beneficiaries of that would be the revenue streams that are tied to it. So the 70 and 30% would both bring larger amounts of dollars. Assuming tuition didn't change, that part would stay the same. So yes, if there is a shift in the relative contributions of tuition versus Campus Alberta grant, over time we will start to see the way that the revenues mix potentially resulting in different kinds of mixes. If we're talking about relatively modest shifts, I don't think it's going to be a problem. If our Campus Alberta gets cut in half and tuition tripled,
that's different.
That's different. We'll have to go back and visit.
We'd have to examine that. That's a great question. And on that note, I think we're going to conclude. Now, if you do have questions that you think of afterwards, and I wish I'd asked, and there's a website that you can put your questions in, and we will post answers. So maybe you could share that.
Hi. If you want to know anything about the budget model, just in the search bar at ualberta.ca, type in budget model, and the first link will take you to the budget model website. And we'll be providing updates as time goes on in terms of frequently asked questions. You can also submit to budget.model@ualberta.ca. And if you want to have a look at the other website that Gitta was chatting about on budget planning, you just need to put budget in the search bar, and it will take you there. Thanks.
All right, thank you, everybody. Good session, good questions.
Hi.
Joseph Marchand, Department of Economics.
Joseph?